We anticipate to get revenue of this magnitude from this and whatever. I think what the minister would have done is that if we never amended this, for example, rental, what were we collecting? If we give you this is what we are going to get, so that we make comparisons if we are going to do it right or whatever. Because a law which come here must come saying that the one we have is defective. I have not seen them coming here to tell us it's defective here. And that's where my worry is, Mr. Chairman. And that's where I want to begin from.
Okay, and probably that's what will come out when when we go clause by clause.
So, Mr. Chairman, section 1, clause 1 has no problem. That's the law. It has to come in effect from 1st July 2021. But if you go to clause 2, I think I want to refer members to page 10 of this volume. I don't know if it is well done. I hope it is the same page. There's already a definition of beneficial owner. It is already there. I want the minister to help us. What is it trying to cure? With the definition already there, and I've looked through, there's no big difference. And I don't know, when the words be changed, we could have a problem. So what problem do you have with the current beneficial owner? And what loss have you been making because of this definition? And when you make it this way, this is what you are going to gain.
We need to dispose that immediately. Kagwa, please.
Thank you, Mr. Chairman. That you must have a very good beneficial ownership. And then, under the OECD, where we are going to cooperate in helping us to recover taxes, you need to define exactly who a beneficial owner is. And the purpose here is really clarification when you see it. And that's why we said already Parliament had passed this law, but we have changed. And now you can see that here we start with a natural person, a legal person, to include a natural person, to be very clear who either indirectly or indirectly holds at least 10%. A natural person who exercises control over the legal person. So when you look at it, it's a bit different. It's more comprehensive than what we had. That's really the purpose.
Kagwa, to add, additionally, we should also mention that this is not our idea, but we are required to do it in order to meet the international best practices and also be able to be at the same page with the international tax policy requirements. So, Honorable Mafabi, I know you are uncomfortable. I was also uncomfortable, but I was comforted by the fact that our people here did not come up with this idea. This is something we are just regularizing as a country.
So, Mr. Chairman, if that's the case, I think what you would have done is to attach that. Now, if I hold one share, am I not a natural person? You see, that's why we're saying the odd law.
And when you look at it, Honorable Mafabi.
Okay, Honorable Minister, that is understood. But the question again is, what's the implications, corrections or gains? What's the implication of this definition?
The implication is that this definitions that these are the persons, these are the thresholds that would lead to that. Equally, when we are seeking information as a tax administration from other tax administrators to give us information on who the beneficial owners of either businesses in Europe or in Uganda are, this is what every other country is expected to have. So you provide information in this. So in other words, there's clarity. Yes?
In other words, Chairman, is that we want to use it to enable us exchange information with other countries for tax purposes. As simple as that. Because it's a standard which...
Chairman, my worry is it's a standard, which is okay. What you are trying to say is that nobody should hide under company. Eh? Now, if you say 10%, then those who are below 10% will hide. So what you would say, my grandmother, 9%, like that, until if you total, we're even controlling the company, but we are not being subjected to this. If the moment you mentioned anti-money laundering law, that's why I'm coming. For us as Uganda, I think we should remove the word at least 10%.
But anyway, Honorable Minister, I think we wouldn't be having this debate if you had come with that evidence that it's an international accepted definition that we are trying to comply with.
Mr. Chairman, we can provide the evidence.
Okay, can we leave it at that then?
A percentage, people will use it and circumvent and cheat, they do money laundering. If we want to fight money laundering completely, those using companies, we should say, for us Uganda, whether you own 1% or more, you'll be subjected. And we're better.
Mr. Chairman.
Chair, thank you. I want to thank the
One second. Let's see here.
standards. Now, what I want to know as a country, as Uganda, is there a leeway that we can, within the international standard, set our own standards? In relation to the shareholding of minimum of 10%, can we say for us, we say at least a share or at least 5 shares or that kind of thing?
This was also related to transfer pricing, and I expected the Honorable Minister to address himself in that regard. Is there anything you're trying also to cure on the transfer pricing issue using this law?
And members, starting with the Vice's concern, I just want the international practice. So it would be, if we conformed outside it, then we wouldn't be within the line that is expected. Then I also wanted to just add, in terms of the Honorable's concern regarding the percentage of the shares. If you look at this new text that we're introducing, it presents a sequence from A to B, but it also says that whoever has direct or indirect control on this company, or whoever has a power to make or influence decisions in any legal person. So it introduces a broad perspective when it comes to defining who a beneficial owner is. Now, what that means is that when we are requesting for exchange of information, we'll be clear. We are curing the ambiguity in getting the international best practice, but we will be clear. That is why it introduces a sequence. If you look at the previous one, it was a bit limited. This one is broad, and it will give us perspective when we are seeking information from our other respective jurisdictions. I thank you.
Okay, I think we leave this at that, and we'll return.
For profit. The moment we have it not for profit, we're set, we're good. Otherwise,
and this can be thoroughly verified.
Yeah. Otherwise, you will say public, then those private ones in the villages, wherever, will not do research because they will say it is not exempt. The expenses will not be allowed. No.
Let me hear from you.
Yes, we have research organizations which come actually here. The little money they have had for research, and we say they should be taxed. Actually, this is clarity. It helps. Okay. We need to encourage research in this country. That's where we've been missing.
As long as you can verify properly.
Honorable Chair, an issue for URI. How will you monitor, especially consultancies that may take cover under this kind of provision?
And for fairness, why would you restrict the issue of...
A lot of individuals, when you are doing this research, you are getting a benefit, a personal benefit, unless you can prove that all the money that you have used when you are doing, yes, it's not for profit. So it's mostly these institutions that come in where there's been a problem, that now we are not very sure. Okay, URA has been trying to tax them. I'll give an example of the Economic Policy Research Center. They get money from government to do research, but there was no provision in the law that would exempt them, and URA had difficulty to say you are exempt because there was no provision. So that's why this provision is important, for clarity, really. And those are the challenges we've had with these institutions that report, that actually file returns with URA. A lot of individuals, if you are doing it not for profit, if you are doing it as a hobby, and you're not getting any money out of it, you don't file. You're there, you are. But for an institution, it must either be exempt or should pay.
Okay, Honorable Simwe.
I think it costs us nothing if we add that a religious, charitable education institution or research institution of public nature. I mean, the institution should be of public nature, because that one will solve the issue of individuals doing research, and I think it will also reduce the administrative. It's very clear that the institution is of public nature. So, Chair, I submit that we add a provision that the institution should be of public nature.
I think it's something we need to note, and we'll come back to that when we have our internal meeting and concluding.
But Mr. Chairman, I would really advise against that, because you are bringing in a lot of subjectivity. What is the public nature? What is not? The most important thing here is not for profit. Yeah.
I might do research, showing to URA that it's not for profit. At a later date, I use that same research for profit. So how would you as a tax administrator find out on that?
Mr. Chairman, I want to give an example. IU, that's Islamic University. Uganda Christian University. Those are not public universities. Makere is only a public university, and I think Mbarara and whatever. But they do research. In short, if you don't do it to allow them under this, that means that they will be liable to what? To tasks. So I think let us not really try to complicate things. For us, what should be determined, not for what? Not for profit. And an individual who is doing research does not necessarily have to file a return.
Okay.
Unless he's doing it for what? Profit.
For profit.
Okay, clause 3.
The land, yes.
You are clause on, still on clause 2.
Yeah, because we're dealing with interpretation. Clause 10. Eh?
Sorry, that's in the...
Okay, fine. Maybe we shall come back to it.
Sorry, okay, we are now on rent. Huh? Okay. Rental.
Rental, there are two issues here. I think rental, we should handle it under 3 and 5 and 12. Mr. Chairman,
you said 3, 5,
and 12.
5. All right, okay.
Yeah, they're all related to rental. I want the minister to help me understand that he is defining expenses to be allowed on rental. And when you look through, for a partnership, of course the partners, that will be gross. When you go to 5, for a company, it will be allowed 50%, and then excess will be carried forward for claiming in the future, while for an individual has no allowable expense, you are looking at the gross, and yet they have done the same investment like a company. The other one is a legal person. This is a natural person. Why are you segregating?
Maybe just to augment as the minister waits to respond. So previously were being treated in the same way, where the tax deductions and expenditures were being allowed up to 75%, which in my view, by the way, was a crazy idea. It was very crazy. You were basically doling away income. So from that perspective, we are all together, Mr. Minister, that we need to generate more revenue in this area. The contention we have is the treatment of the two entities. We have many, many Ugandans, and it goes to the spirit of what the chairman was saying. How do we help the individual? Because the majority of the people who are constructing and doing a lot of work, they are in the majority, the individuals. The companies are very few in numbers. So here, when you're making the adjustment, you say no expenditure deductions will be allowed for individuals. So you've left the majority of our citizens in the cold. And then you come down now to tax a flat rate of 12% across the board. So you've given them no opportunity for deductibles, but you're saying your revenue, I'm just grossing the tax at 12% on everything. Then for the company, you say we would allow you deductibles up to 50%. Okay, you just drop from 75 to 50. And then you say out of the 50, we will only tax 30%. So you allow the company to take away 50% in terms of deductibles in expenditure. Then you say, okay, the 30 of the 50 is actually not very big amount if you compare with not allowing deductibles for the individual, then you tax 12% of a very big amount of the full amount. So I think what we really need to agree, what this committee is looking to do is how do we balance this thing for everybody so that everyone has a fair share of these taxes. Thank you, Chair.
Okay, any other comment on this? Oh, yes, Honorable Vice Chair.
Thank you, Chair. Chair, in clause 5.
To you, Chair, and the Honorable Mara, that we agree with the principle that we must get tax from rental income. That one for sure, I am very, very, very grateful. The question of how to do it between companies and individuals, why the 12%? Why are we not looking at expenses? Mr. Chairman, I now want to bring in the layman's perspective, and Kagwa will bring in the technical. Mr. Chairman, you know that our economy is largely informal. And number two, most of these individuals do not keep records. It is very difficult to ask me, for example, in quotes, how much expenses do I incur on my rented property? So with all this surrounding, it becomes difficult for us to ascertain that 50% or so from the individual. That's one of the reasons why we think going for a specific rate would be helpful for us to generate some income. There is another matter which we have identified. What has been happening on individuals? An individual, assuming, I wish we had somewhere tried, assuming an individual is earning rental income of 10 million, this individual is allowed 75%. The balance of 2.5% is what remains available for tax purposes. Assuming this individual constructed this rental property using a mortgage and is paying interest rate on a mortgage of, let's say, it can even be 4 million, can be 2. This interest has been allowed to be charged separately. What this means, we end up with nil to tax. You charge, you allow deductible expenses, you allow mortgage, and then you end up with nil. I am happy Honorable Mara agrees with us that we should move from this scenario to a scenario where we get money. So the question is, how do we really get rental income from an individual? It is very difficult to ascertain their expenses, but it's easy for us to trace their income. So now this being the case, that's why we are proposing the 12% on total, so that we are able to pick something. But if you go for expenditure, they will claim everything and we shall not get any money. Kagua, can you add the technical?
So you've actually sounded technical.
Simplified. We get more revenue than we are getting now. Mr. Chairman, the rental tax proposal is not new to us. We have debated this matter year in, year out, and I'm glad that we are now getting to a convergence that we need to tax this area.
Okay.
Mr. Chairman, why rental tax issue becomes contentious? We are direct benefit, no, we are the people who are directly affected. Me and you and all of us know the implications of this tax. I wish to appeal to you colleagues that we debate this out of ourselves. Then we can have a meaningful discussion. I would like to invite Honorable Mafabi to be of help here from his experience and also other things. That I am putting this question to you. The principle is agreed. Tell us how to do it so that we achieve our objective of getting revenue from rental, and at the same time, our people are not hurt, like the chairman said.
Chair,
For me, my view is...
clarification.
Can I finish then this is a committee, don't worry, and we are here for the whole day. Mr. Chairman, I want to pray that the committee allows us implement this for at least next year. If it fails, we shall come up with another proposal that works. Because, Mr. Chairman, we have arrived at this, having tried nearly all the options available, and they have not given us what we want. And we think this one can work. Mr. Chairman, I want us to appreciate the proposal from that spirit.
Honorable Nandala Mafabi, have you got a better proposal how this complex thing can be
For
made?
instance, as I finish, before Mafabi comes in, like this issue, he knows how fatal it is when you allow to charge interest on mortgage separately. Ideally, it brings us back to zero. We shall not have achieved anything. So I would like us to really to invite him to look at this proposal from that perspective, so that we are able to move.
Honorable Nandala Mafabi, and then probably you can take that away as we move on with the other.
Mr. Chairman, he knows how we are in agreement with somebody to collect rent, you are aware, that one we need also to discuss it. But, Mr. Chairman, my argument, which I want the ministers who are going to make, I am very positive, by the way. My argument, I'm saying, why treat a legal person who is better than an individual? Because if you are saying everybody should pay, let them pay. I was asking Enos here. He comes from Moriatonde. I asked him, there are those people who do tenders at his district. There are companies. You know, to get a tender, you must be what? A company. I asked him, do they make returns? I saw him shaking the head. I don't know. I just see that. So, because that Chikobo woman can also decide to make a company and they will defeat you. He will defeat you. For me, which I want URA to do, and you, Minister of Finance, go and index every person, every property in the company. Let me give you an example. Start with Corolla and Naguru. Get those land titles are known. Those are known. And say, you guys, you are here. What are you doing? Where is rent? Tax, rental tax, you will make money. I am the chief supporter of that rental tax collection.
If you can say it.
Be sure of that. So what I want you to go back is to think, why give this one 50% and even continues to carry forward? Either we say 50%, if you can't get enough, forget. The following year you will get a maximum of what? 50, other than giving him or her an incentive and a legal entity to carry forward. At the end, one day you might amend the law and say, oh, losses carried forward, I'll allow in 1 year. And I will get back better.
I think they carry forward.
Provide a response to that, Chairman, through Chairman.
Okay. We look at our economy in a holistic approach. I remember when this tax was being introduced, we warned, and I remember now he was still chairperson finance committee, and we told you that it will have an impact on desire for people to make investments in form of real estate. One, you'll all realize that nearly all businesses are coming to a standstill and our economy is slowly stagnating. Now, all people have channeled their likelihood of investment in real estate. When you look at the rentals, Uganda is probably in a shortage of about 1 million rentals, given the growth of people who desire to rent buildings for housing facilities and commercial facilities. I'll give you an example if you look at our data. Now, if you look at technological backed data, you have over 100 to 130,000 youth turning from age 23 to age 27, around that bracket, and who desire to become independent. In so doing, these are people that are just starting up. When you shift the burden on the landlord transfers this burden to the young person. I can tell you, whether you like it or not, this is the reality. Now, in a country where government negated its responsibility from taking part in infrastructure development for rental, whether at city authority levels or at national government through national housing, now that leaves a huge gap. For me, Mr. Chairman, I would like to make a case that I respect the views of my colleagues, but I'm against this tax totally. Or if it has to be implemented, it has to be at the inflationary rate, at the rate of inflation. If the rate of inflation is at 2.3%, then so be it. Because if we don't follow that trend, we will kill the very business of real estate that we want people to survive on. That is one. And you can bring a study out of the years, what we've been collecting from this tax over the years and how it has benefited that sector, whether it's to the positive or to the contrary. In my opinion, this is time to look at avenues to reduce either further the tax burden on the people, or I know we have a shortfall, but if we are strategic, then let's go for those sectors where we can invest money and get returns as a government, not looking at, putting a higher burden on people that cannot pay. I'm aware you want to take it at 12%. My view then, and you can check the Hansard, and still remains that even in the worst case scenario, look at the inflationary rate. So that, yes, their money is losing value, but this is also what they are paying to close down the gap. But the more you increase it, then investment-wise, the ripple factor will lead either to evasion or stagnation. But when it's light, and say 2.7%, or 3%, it's understandable. It's shiftable to everyone because it's following the inflationary figures. But if you increase it, and people borrowed way back 10 years, 15 years, and they are servicing these loans, they do not instantly increase the rent.
Procedure, Mr. Chairman, procedure.
Procedure, Honorable Mafabi.
Mr. Chairman, is it procedure right for a member to take us back? Because he has come and you have given him an opportunity, yet we are aware.
Honorable Chair, honorable members, before I start, I also want to say that you should invite the Ministry of Energy.
Why didn't you come?
No, because, yes, you should invite them specifically on this matter. Because they know more of the tariff, the power mix, and what have you than us at this time. You know, when the questions start coming on energy, I would have loved them to be the ones to present.
Yeah. Let me.
Something simple.
Please.
Because,
please let them respond.
It will help me understand what he's going to tell us.
No, let him respond, and then if necessary, we'll follow it up later. Please.
Okay. Unlike other exemptions that we have issued to benefit the investors, most of the tax holidays have been benefiting the investors. This one was granted specifically to help on the reducing the cost of electricity. So, and it's shown that the license which was issued by the Electricity Regulatory Authority and the power purchase agreement defined the Bujagali capacity price, because that is what you look at, to include debt repayment, interest on debt, return on equity payment, corporate income taxes, other taxes, operations and maintenance costs for the power grid, miscellaneous charges, and government equity repayment. So all these were part of the capacity price that Bell or Bujagali would charge to UETCL. But following the refinancing in 2018, and of course the waiver of the CET in 2017, the cost drivers of the tariff charged by Bujagali now included debt service, return on equity, and operation and maintenance costs. what did the corporation income tax exemption do? When the exemption was given in 2015, it was meant to reduce the generation tariff, that is the capacity price, payable to BEL, and therefore led to a reduction of end user tariffs. We have here figures which showed that in 2018, when you look at it, 2018 the tariff would have been 13.22, but it went down to 10.48. In 2019, it would have been 13.61. It went down to 10.59. In 2020, it would have been 13.92. It went down to 10.45. In 2021, it would have been 14 because it should have been going up, but instead, it didn't go up so much. It went up from 10.65 to 10.71. And in 2022, it should have been 14.23. Instead, it went down to 10.68. So you see, sir, with the exemption, that where the tariff would have been and where the tariff is. So that is the capacity tariff, and that is the impact of the exemption, that it managed to retain.
No, that one we have accepted.
Yes.
You don't have to labor that one.
Yes.
So now the question is, how will this bring it down further?
No, if you don't give it, it will go up. It's not about going down. Yes.
That is why, Chair, we would want to have the Ministry of Energy. We want to see that energy mix. We want to see their contribution to the national grid.
Clarification.
Now, the moment we get that one, it might be actually not impactful at all, because other dams, generations are coming.
Thank you, Chair. I really expected by the time the team at Finance drafted this bill, they had all this information.
The reason as to why we give this exemption is premised on the fact that the tariff will come down. All right? Therefore, you've come with half an answer, as I may say, because the issue you are addressing here is generation. But to arrive towards the tariff, there are distribution costs.
Yes.
You understand? So, in short, you're telling us we have to support this investment based on a promise. And that's why we've come out to say, what was the promise in 2017? The promise was to drop it to 7 cents. Now it is at 10. Therefore, they have not lived to the good of their promise, regardless of the exemption that we gave. Now, the people here are telling you, and probably you'll have to engage the energy people, what justification do you give us that when we give these people another exemption, we are not taken for a ride? That you exempt them, they cover their debt, but they continue to charge you and walk away with their profits. And that's why Honorable Quir started by saying, you take away from the poor to cover gaps for the rich. You further tax the startups in order to shoulder the burdens of the very rich. These are not poor companies. And that's why someone was asking for the audited books of accounts, so that you show the world the justification as to why you move from Ruboa and you give a rich person money and you give another rich person exemption to that tune and give others etc. And you get the burden and you shoulder it on a teacher, on someone with a small startup, on someone constructing a small house somewhere as a rental.
Okay.
Mr. Chairman,
I think we need to allow them to.
Since 2001, he has been in this committee, so he has become a honorable.
By association.
Yeah. He said, on the expenses, return on equity. That means they say our return on this money, this amount, they expense it. And if you expense it, it means the net. Now, there's a return on equity, there's interest of all the then the net, after even getting on what your opportunity cost of the investment is where we're saying you should pay 30%. We are saying that one should not be what? Paid. Now, maybe let me give the coroner, which you have been here. We gave them 10 years. We gave them 5. We have allowed them industrial building deductions. Now, in all these years, has Bujagali not recouped the investment? Now, if they have recouped the investment, this return, which will be taxed, this whatever, how much is this tax? How do you plow it back? Because you are saying, instead of paying 30%, that 30%, they take their 70%, in addition to the other one, they have taken up the return on equity. They take the 30% is the one which they use to reduce on the rate of what? The tariff. Now, I want you to help us to understand this tax, how does it translate in those units which you are talking. And that's why the colleague asked, wanted the accounts. 2, what do? They generate power. Evacuation is not done by them. So they generate, they hand over. There is a meter somewhere, whether it has become a year, they adjust it. Give us the money. Where is their loss? Even where they're even selling us redundancy, everything mentioned it, even theft. By the end, theft. And you say,
even the theft we pay for.
We pay for it. And you come again after doing their accounts, we can't allow us to pick only 30%. In any case, we represent the Wananchi. We have said, you pay, give us the commercial what? Rate. Now, what is your fear? Who is the beneficiary in this 30%? Unless you must tell us, who is the beneficiary in this 30% apart from the owners, the Madvans of Bujagali?
And just one sentence.
But let us allow them at least respond. You know, we've been... Okay, Honorable Minister, please.
That a bill would charge to UTCL had a number of components and said this capacity price includes debt repayment, interest on debt, return on equity payment, corporate income taxes, other taxes, operations and maintenance costs for the power plant, miscellaneous charges, and government equity repayment. So all these we're saying that, yeah, these are now what we will sell to who? To government, and say all these are going to be included in the capacity price. So for you to reduce that price that is charged to UTCL, one of these things are to give way. So if, for example, other taxes, we'll say we paid those other taxes to reduce the tariff. Then the corporate income tax, that's what they came up and said, now if you don't reduce the corporate, if we charge the corporate income tax,
clarification, just clarification, just to be sure. The capacity price is based on, I thought it should be based on expenses, not on income, not on income.
It was
which income is what you live, where you live your tax. I'm seeking clarification here.
As I've said, because this is from the agreement. No, there's not a mistake right now that we are going to change today, Honorable Mafabi. It's all those components that we are making up the capacity price. And then, when you look at the component, we agreed with Parliament in 2017 to reduce the cost that we are going to go up then to 13.22. We removed the corporation tax, and the price and the tariff actually did not go up. It went at that level. Now, of course, with the developments that are coming in, if you grant the exemption, the price would actually go further down instead of remaining high. So that's really the thing.
Okay,
Mr. Chairman.
Let's go.
But
how does the corporation tax become a direct
I'm sorry,
tax?
my senior,
okay,
Honorable Nandala. But you haven't told us, for how long is the power purchase agreement?
I think the power purchase agreement was 25 years. I need to confirm, but it's almost done and it's being renegotiated because government thinks, wait, no, it's not yet over. I'll get the facts. But our government is trying to renegotiate it.
Okay.
And actually buy out Bujagali. And I think there was a proposal one time that was brought by the Minister of Energy in Parliament that they needed money to buy out Bujagali. Because of these things, it's very expensive. And that's why our tariff is not going down as fast.
Okay, but come back to us with the projections of if we grant this exemption, how much revenue will be forfeiting. But also we'll be I think we've already arranged that. We'll be inviting the Minister of Energy for this. Yes, Honorable.
It's from.
Oh, okay.
Okay.
You get that?
You get. You give us, provide us revenue that is foregone for every initiative that Bujagali benefits from. Secondly, it will also be prudent that we have furnished the committee with the information on Bujagali tariff payment by tax head.
Okay.
So as this will drive, the other thing is, in Parliament here, in the budget framework paper, we took a decision that this year, until we do a comprehensive review on all these exemptions, we should be very reluctant to grant more. Because, Honorable Chair, because yesterday I made a case and said the revenues foregone in these exemptions are 7.7 trillion. It is incredible that all our domestic debt, and actually not only domestic debt, because if you correct 7.7 and you forego interest on debt rollover and everything, you will save about 10 trillion of our budget. And that is a milestone in the transformation of the country. But to forego that, all that money. So the challenge we are now having as a country on energy is in execution, evacuation. That's why we're paying costs on redeemed energy. So they would have had a case if they were giving exemptions in facilitating a quick network that can evacuate power. But right now, our challenge is not where they are pointing. We are paying energy for redeemed energy. Our power evacuation network is still really very limited. I was speaking to some Chinese who are constructing some of those stations and said they've never operated in a country where there are stupid people like Uganda. That's what a Chinese told me privately. Said, these Ugandans, you produce energy and it's there and you don't take it, you are very stupid. So I would have heard from experts who come to this point and say, if you give this initiative, we can evacuate all the energy that we produce and save money on redeemed energy. But this is traditional. It is a very conventional way of doing business, and it's business as usual. So I rest my case, sir.
Okay, so if you can get that for us, that information at least by 10 a.m. on Wednesday next week. No, I think it's okay for
of local materials, minimum of 100. This is where people want to hide again. They want to increase the number of people who want exemption. So the minister should really, for purpose of collecting tax, this should not have been brought now. Shouldn't. Now, in this case, Mr. Chairman, the minister should be happy that this does not pass now. We study until we are done.
Mr. Chairman, I just want to add that 4B should be read together, those two clauses, 4B and 4B. I think should be 4C. It goes to the same thing. Somebody has been working share for the last 10 years, and they have never had tax exemptions. So now this is very opportunistic time just to come and say, okay, my balance sheet has now grown. I've been an investor now for this period of time. It has reached 5 million. It has reached $35 million. Please give me now exemptions. We should avoid tax exemptions now. It is an area which is hemorrhaging our tax revenues. So, Honorable Minister, you have fantastic ideas. This one, let's generate money. Let's not create exemptions where none.
Ability. I don't know whether you're listening to me. Yes, I personally have a concern. You've left out in your presentation that bit of subject to availability. 50% would be okay with you in terms in the fact that you are promoting Bubo, you are promoting local content, but you are again saying subject to availability.
I save you time. We have this proposal, but we shall respect the committee's decision.
Correct, very good. Okay.
So that we...
Okay, thank you, Honorable Minister. So members, keep your views to the time when we will have our internal further discussions on this. So we go to, and that affects C as well? Does that affect C as well? Yes, so we go to, we have already done 5. We've already done 5, so we go to 6. We go to amendment 6. Anybody with, I read it, okay. Amendment 6 is an amendment of Section 85 of the Principal Act. Section 85 of the Principal Act is amended by inserting immediately after subsection 4 the following. 5, for avoidance of doubt, income derived from the carriage of passengers who do not embark or cargo or mail which is not earmarked in Uganda is not income derived from Uganda source service contract.
The Minister explained it very well, Chair. And I think it was more of alignment. It was to align that international thing.
Standards.
Yeah.
Members,
So
I think that one we agree. Let's move to 7. That one was very clear.
that one also.
Let's go to 7.
Shadow, that was okay.
7 is amendment of Section 89GB of the Principal Act. Section 89GB of the Principal Act is amended by substituting for Section 2 the following. 2, if the cost of acquiring an intangible asset is treated as petroleum exploration expenditure, Section 31 applies to the asset